So there is a global bond crisis, and countries like China, which was a massive buyer of US treasuries, is now dumping, selling, getting rid of those bonds and moving the money into gold. The global bond crisis is only going to get deeper. Governments are spending far too much money and they don't have the revenue coming in order to meet the interest payments. So what are they doing? They're printing money. Like last week, the US Treasury bought $10 billion of surplus US Treasuries. Question why there would be a surplus. Why would there be a surplus of US Treasuries? Because no one wants those US Treasury bonds. It's quite simple. So how is that going to impact the metals like gold and silver? Well, I've been saying non-stop, go to gold, go to silver. These metals are significant and they're going to continue moving higher. As there is a lack of confidence in the global fiscal and monetary system, then you're going to have a search for asset that can be tradable, can be used. You can actually buy gas, petrol, food and pay the rent with it, gold and silver. And historically, the ratio between gold and silver was 10-1, maybe 15-1 during the Roman era. However, that ratio has now moved from 100 to 1. In other words, silver is massively undervalued, and silver is a usable, valuable, precious metal. You can actually use silver to buy goods. Silver coins can be used to buy goods. So overall, as the bond crisis deepens and countries like China and Saudi Arabia and Japan dump the US treasuries, then what you're going to have is a move to assets that are going to be tradable and usable and hold their value against inflation and obviously increase in value. Now, what's going to happen is that in order for the US to pay its interest on its debts, it's going to end up printing more money. So the buying back of $10 billion of surplus US treasuries is considered to be called on the street light quantitative easing. Light quantitative easing. In other words, slight little money printing, but not too serious. So you're going to see a devaluation of the dollar, you're going to see rising yields on bonds, and you're going to see significant uplift in gold and silver. So silver has a long way to go to catch up with gold, so that is probably the metal that is going to be the most attractive to buy and to trade. But when you're looking at metals, you should be buying the physical metal and the paper metal. The physical metal you can hold in a safe deposit box, and the paper you can trade. If you want more information, DM the word